Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh. My name is Muhammad Azza Imam Lutfi. My numeric is 23, DIF 23F 2022, and I'm gonna be present to you guys about business accounting.
Hi, Assalamualaikum. My name is Muhammad Lutman bin Suyama and my number matric is 23 DIF 23F 2018. Hi.
Bismillahirrahmanirrahim. My name is Muhammad Hakim Abdul Latif. My matric number is 23 DIF 23F 2009. I'm from Group 3 and thank you.
Hello, Assalamualaikum. My name is Muhammad Zindani bin Muhammad Sofian. Number matrix is 23 DIF 23F 2025.
Hi, my name is Ahmad Imran bin Ahmad Ahmad. My matric number is 23 DIF 23F 2012.
Objective concept: the business financial record to prepare based on variable evidence and transaction details obtained from source of document to support the business transaction that has taken place. Entire based on personal view or perception should be avoided because they are inaccurate and not reliable. Example, the recognition of revenue should be based on variable evidence, such as the delivery of goods or the issue of invoice.
Historical cost concept. This concept requires all assets and liabilities of a business to be recorded at their historical cost. Historical cost is the original cost of obtaining an asset or liability. All assets and liability will be recorded with the same original amount until the assets are sold and the liabilities are fully paid. Example, ABC Aslian Berhad bought a car on 1 January 2020 for 500 paid by check.
Okay, so next is a money management concept. First, all the transaction and event they are capable of being measured in monetary terms and recognized in the financial statement. Second, all transactions of the business are recorded in terms of money. Third is a provide and common unit of measurement. Example, market conditional, technological change, and the efficiency of management will not be disclose the account.
Okay, going concern concept. Firstly, accounting for a business should be prepared with assumption that the business will continue to operate for an indefinite period of time. Secondly, the business accounting should be done carefully and competently to avoid jeopardizing the operational activity of the business. Lastly, this will enable the business to release its asset and settle its obligation in the normal course of business. Okay, for example, possible losses from the closure of business will not be anticipated in the accounts. And prepayment depreciation provision may be carried forward in the expectation of proper matching against the revenues of future periods.
Separate entity concept. This business and its owners are two separate entities. This concept claims that the personal activities of a business owner have nothing to do with business and are not considered a business activities. As such, they cannot be recorded in any of the business transactions. For example, drawing account, all the owner's personal transaction will be recorded in this account. Insurance premiums for the owner's house should be excluded from the expense of the business.
Invoice credit purchase. Credit purchase refers to a transaction in which goods or service are acquired with an agreement to make payment at a later date, typically after a specific period of time. In such transaction, the buyer receives the goods or service immediately but agrees to pay for them at a later time, often with interest or other fees applied.
So next is a purchase return. First, a purchase return, also known as a return of good of merchandise, refers to process which a buyer returns goods to the seller for various reasons.
The buyer issues a purchase return or debit note to the seller, indicating the detail of the returned goods and the reason for the return. The seller in turn issues a credit note to the buyer, acknowledging the return and either refunding the purchase amount or providing a credit to be used against future purchases. These transactions have maintained accurate record of inventory and financial transactions for both parties involved.
Credit sales. Credit sales refers to transactions where goods or services are sold to customer on credit, meaning that the payment is not made at the time of the sale but rather at a later date, typically after an agreed upon period of time. Credit sales are recorded as account receivable on the seller book until payment is received. The seller typically issue an invoice or sale receipt to the buyer, detailing the term of the sale, including the amount of owe, payment due date, and any applicable interest or penalty for late payment. The example is sales agreement, invoicing, payment period, payment, delivery, goods or service. Thank you.
Next, we have drawing. Typically refer to the withdrawal of cash or another asset by the owner or owner of a business for personal use. It's important to note that drawings are distinct from salaries or wages, which are payments made to employers for their work in their business. Drawings are most commonly associated with sole proprietorship or partnership, where the owner have direct access to the business asset. In a sole proprietorship, the owner may withdraw funds from the business for personal expenses, while in a partnership, each partner may make drawings for personal use.